Talking of bombshells, we've got a business bombshell for you now. We're joined here in the studio by Brian Quinn from the France 24 Business Desk, and it's a widening crackdown on the cryptocurrency industry in the US, isn't it, Brian?
Let me drop this on you, Stuart. This week, seeing major legal action from America's top markets regulator against some of crypto's biggest players. First, the U.S. Securities and Exchange Commission sued the world's top cryptocurrency exchange, Binance, accusing it of mishandling client funds and purposely evading U.S. regulations. Now the SEC is targeting the U.S.'s largest exchange, Coinbase, saying that it has been operating as an unregistered securities broker. Camille Knight has the details.
The crackdown on cryptocurrency platforms is heating up. Just a day after suing Binance, the US Securities and Exchange Commission is taking aim at Coinbase, the US's largest crypto exchange, for allegedly acting as an unregistered broker.
As alleged in our complaint, Coinbase was fully aware of the applicability of the federal securities laws to its business activities, but deliberately refused to follow them. While Coinbase's calculated decisions may have allowed it to earn billions, it's done so at the expense of investors by depriving them of the protections to which they're entitled.
Coinbase has hit back, blaming the regulator's approach.
The SEC's reliance on an enforcement-only approach in the absence of clear rules for the digital asset industry is hurting America's economic competitiveness, as well as companies like Coinbase that have a demonstrated commitment to compliance.
Meanwhile, Binance, the world's biggest crypto exchange, and its founder, Changpeng Zhao, were accused on Monday of running an illegal exchange in the US and misleading investors. Binance has long argued that it isn't subject to US laws because of the fact it doesn't have a physical headquarters in America. But the US has been tightening its grip on crypto platforms, particularly since the collapse of FTX in November last year. Its founder, Sam Bankman-Fried, has since been charged with multiple counts of fraud and conspiracy and is now awaiting trial. The EU also recently enacted a landmark law with tailored rules for the sector. It's the first of its kind, with the aim of establishing a consistent regulatory structure for crypto assets across EU member states.
To China next, where the latest economic data is painting a grim picture for the global economy. Exports for the month of May in China were down 7.5% from a year earlier, a far steeper decline than the 0.4% economists had been predicting. That drop follows growth of 8.5% in April. Imports for May, meanwhile, were down 4.5% on an annual basis. That a slower decline than April's 7.9% fall. The figures, though, signaling weak demand both domestically and abroad as inflation and high interest rates weigh on consumer budgets. Well, as global economic growth slows this year, the World Bank is warning of intensifying financial stress in developing nations. The lender expects worldwide GDP to expand by just 2.1% this year, well below 2022's rate. Growth in advanced economies projected at just 0.7%, while in developing nations other than China, growth is set to slow from 4.1% last year down to 2.9% in 2023. At cause, the pandemic, Russia's invasion of Ukraine, and tighter global financial conditions, a combination of shocks that are dealing an enduring setback to emerging economies. The World Bank says rising interest rates in particular are hitting poorer nations hard and triggering a debt crisis.
That situation has been becoming worse in terms of developing economies' ability to pay back debt. Interest rates have increased dramatically, and because of course, the banking stress, financing conditions get even tighter at the global level. So from 2000 to 2019, we saw only 19 sovereigns defaulted. Since 2020, we have already seen 14 countries defaulting. So we have a real debt crisis in our hands.
Let's get a check on the day's trading action now. That disappointing Chinese trade data weighing a bit on Asian markets in Wednesday's session, though not enough to send Chinese indexes fully into negative territory. Hong Seng, on the contrary, up more than a full percent, though Shanghai just barely treading water, about 0.25% above the flat line. The Nikkei in Tokyo, though, dropping nearly 1.5% after hitting a 33-year high earlier this week. The Kospi in Seoul up just 0.2% ahead of the closing bell there. Well, shares in Korean automakers Kia and Hyundai are each losing ground on Wednesday amid news that they're being sued for their cars being too easy to steal. New York City filing legal action on Tuesday as the government there accuses the companies of negligence and creating a public nuisance. The city says that from 2011 to 2022, Kia and Hyundai failed to install devices known as immobilizers on their vehicles, resulting in an explosion of thefts and reckless joyriding. The trend made worse by a series of TikTok videos showing how to easily hotwire the cars. The companies have already settled a class action lawsuit over the same issue last month for $200 million. I hope we're not encouraging anyone to try this for themselves, Stuart. Don't go steal cars.
Yeah, no, it's not good,
Not
kids.
good.
It's
Do
not
not
good,
look it up on
kids.
TikTok.
Uncle Brian has told you.
Don't.
Brian Quinn
See you in the
with the
garage,
business news on France 24.